15 assets that are not impacted by a recession. So, in one of our previous videos, we've tackled the street-level signs of a recession. Well now, a recession will be in full swing by August of 2023. Even if you don't feel it yet, it's already here. The government is trying too hard to make it seem as if everything is normal. But anybody with a functioning brain knows that things are far from average. Prices for necessities like housing and food have almost doubled in the previous 2 years, while wages barely increased. So in light of an upcoming catastrophe, here are 15 assets that are not impacted by the recession. For your chance to prepare, watch this video until the end. Welcome to Investing Alpha. Number 1. Blue chip artwork. The term blue chip describes expensive pieces of art made by famous painters who have earned a reputation for producing works that steadily increase in value. Most people probably won't believe this, but investing in high-quality art is one of the finest ways to weather recessions. Blue chip art is high in demand from consumers immune to recessions. The wealthiest tend to grow rich rather than poor during recessions. Art has performed better than the S&P 500, real estate, or gold during inflation over the last quarter century. Number 2. Investing in your skill set. As a good rule of thumb, you can't lose anything you've already learned. Investing in yourself is a great way to protect yourself from a recession. In terms of your bank account and sanity, a recession will have less effect on you if you know what you're doing financially. First, acquiring a new ability will open doors to previously inaccessible opportunities. Second, becoming more proficient in an existing talent means your services are in more demand than ever. This recession is unique. For the first time, remote employment has been well accepted outside regular jobs. People will work on other projects as consultants or freelancers. If you're employed but want to transition from an employee to a business, consider improving your skill set. Number 3. Automation. Does it make sense for McDonald's to pay its employees the minimum wage of $25 per hour to have people take orders? Or is it better to add 2 more touch-screen kiosks that do the same thing? We think that automation is going to happen no matter what. Automation is becoming more common during recessions because companies try to cut costs wherever possible. Some cutting-edge automation companies are still emerging and making tremendous progress. Eventually, AI will replace humans in most jobs, and robots will undertake physical labor. Although prices have increased, incomes have barely budged. Companies will invest more in automation since workers will soon refuse to work unless given higher paychecks. Number 4. Precious metals and golds. Investing in gold may protect you against inflation and economic downturns. It's the go-to hedge for newbie investors. Silver follows gold closely, and over the following few months, you'll hear the rich discussing the benefits of diversifying into metals. Why? Governments need to boost the economy for their country to emerge from recession. They flood the market with cash, which drives up the price of gold due to its scarcity. The issue with more money being printed is that they have been doing it for years, resulting in unprecedented inflation. We see Bitcoin as gold 2.0, so if you're young and looking for an alternative investment, consider Bitcoin. Number 5. Businesses that will always be in demand. We're suckers for companies that have been around for a while and have loyal customers. Evergreen business refers to a company that has been in operation for decades and is expected to continue doing so in the following decades. Consider your children. Even if you cut down on spending during a recession, you'd still send them to school. Home Depot can weather a recession lasting 2 to 3 years. Your family would still use a funeral service if one of your relatives passed away. Some companies will always survive because there will always be a need for their products or services. Number 6. Low-cost, quick service meals. While the economy is doing poorly, people tend to eat more fast food. People tend to dine at pricier establishments when they have more disposable income. When money is tight, it's back to eating at McDonald's, Burger King, Subway, KFC, Domino's, Taco Bell, etc. Despite the recession, they will all do well. Know what won't work? Places where you can get a fast food burger for $15. Delivery services will also be impacted. People will order at a considerably lesser rate now that Postmates and similar services are so costly. It's more convenient to stop at a drive-thru on their way home than to order takeout. Number 7. Tech stocks. The IT industry has taken a battering this year on fears that tech firms are becoming too large, but the future looks bright. In 10 years, will Google still exist? Perhaps. If there is a recession, can Amazon still succeed? Possibly. Take a hard look at the tech you rely on daily, since if you're using them, others are too. Although retail still generates substantial profits, technology is the primary growth driver. New businesses emerge at the perfect time every time there is a recession. Look out for future innovations like Airbnb, Uber, Venmo, WhatsApp, Slack, and more. They all came out of the 2008 financial crisis. Number 8. Telecom. You may call a few days without eating extended fasting, but you better not mess with my internet. The telecom industry is expanding at about 10% annually, and its importance to society is more significant than ever. Due to rising rent costs, businesses will reduce the number of offices they pay for. Those with office jobs will find themselves unemployed when a crisis takes hold, making them seek employment elsewhere. With the economy in shambles, more people will work from home. Therefore, the number of individuals who work remotely will increase, leading to further growth of the telecom industry. Number 9. Typical items found in most people's homes. Consumer staples will always be in demand, regardless of the state of the economy. Consumer staples include products and brands from Procter & Gamble, Colgate, Palmolive, Pepsi, Nestle, and Unilever. Think about what you need to buy rather than what you want. You will continue to purchase toilet paper even if the economy worsens. Look for businesses selling similar items and invest in their shares. Number 10. Having a life insurance plan is a must. Recessions often bring about increased levels of stress and financial strain. The insurance industry is thriving and might be a good match for your investment portfolio. One of the most recession-proof investments is life insurance. In particular, the wealthy use life insurance more than you would think, since it is a tool for building wealth for them. To avoid paying taxes on their savings, many people invest in tax-deferred life insurance plans and take out loans against them. The concept of utilizing life insurance as a savings vehicle is interesting. Number 11. Hedge funds. Those already well off financially should consult with their financial advisors to get a list of local hedge funds that fared well during the last 2 recessions and then schedule meetings with them. Why? These organizations seek ways to maximize their financial gain with little spending of time and effort. The strategy of betting against the market gives hedge funds their name. Several hedge funds anticipated the housing market's decline and positioned themselves to profit, as shown in the film The Big Short, which some of you may have watched or heard. Number 12. Investments in utilities. It doesn't matter how terrible things become, you still need electricity to keep your home running. It's common for investors to include utility companies as part of their diversified portfolio. NextEra Energy, one of the leading electricity providers in Florida, has been one of the most outstanding performers in our portfolio over the last 5 years. It has returned 19.2% a year on average over the previous decade, and for the last 5 years, it has returned 21% annually. Producers, distributors, service providers, natural gas suppliers, and water and sewage services providers are the ones you should check out. Although raw materials costs might increase, demand will continue to rise. Number 13. Pharmaceutical stocks. Fresh off the sales boost they had during the pandemic, pharma businesses may expect to do particularly well in a recession. Either you invest directly in the pharmaceutical industry with companies like Pfizer, or in the retail sector with stores like Walgreens, CVS, and Rite Aid. The pharmaceutical industry as a whole is ripe for the picking. We're interested in online pharmacies like Cuba's Cost Plus, which offer substantial savings on brand name medications by selling generic counterparts. There will be more others soon. Number 14. Raw resources and commodities. While wheat, soybeans, and corn may not be as flashy as artworks, they remain reliable financial investments for those with experience in the commodities market. Cotton will continue to do well as the textile sector recovers, but traders should be careful since not all commodities are the same, like coffee for instance. During recessions, demand for vanilla and spices tends to suffer since fewer people want to use them. Number 15. Grocery stores. Historically, stores that are good at keeping prices low do really well in a recession. Retailers such as Walmart, Costco, Kroger, Aldi, Sam's Club, Dollar Tree, and the like dominate the retail landscape. When shoppers grow more price-conscious, chain stores like Whole Foods often take the most hit. No asset is entirely safe from a recession. The sectors highlighted in this video have weathered recessions. Avoiding putting all your eggs in one basket is the best way to protect your portfolio against a downturn. A diversified portfolio may be recession-proof, but it is the best option for most investors. What do you think? How long do you think we are going to be in a recession? Let the others know how you're coping. Thanks for watching. As always, we appreciate you joining us today. We'd be grateful if you gave this video a thumbs up. Subscribe to our channel so you can watch our future videos, and hit that bell to notify you when we release new uploads.